Stocks are under pressure. We need some answers. So we brought in Mr. Cem Karsan, a senior managing partner at Kai Volatility Advisors, here with us in studio ahead of the options expiry, ahead of a much needed vacation for you, Cem. Thanks for making time for us.
Thanks for having me. Fun to be in studio.
Okay, last time we spoke, you laid it out pretty clearly. Green shoots were forming. There was a window of opportunity. Obviously, the market pounced on that. And now, though, we approach this expiry period, which you had told us could start to make things choppier.
So we've looked out at February 15th to 17th as a window for almost 4 months now.
Okay.
Right? We've been generally bullish and constructive given how positioning's been and given how the flows have been. That hasn't changed our macro view, right, on the realities of liquidity broadly for the market.
You think the Fed and the market long term are still on a bit of a crash course?
100%. There's too many factors, which I don't need to belabor now, but the reality is liquidity is coming off the table, and there's now competition for equity demand in the way of bonds, which is probably the most critical piece of all. But in the meantime, markets can continue to rally, right? And we've seen that for 4 months. The question here is February 15, 17, now that we're in this, this window of weakness, as I call it, right? This period where the VANA and charm flows from option activity have decreased for really a 1.5 to 2 week period. What's going to happen here? And so there's a very, very important little window, particularly as we go into Friday, tomorrow, Tuesday, after the long weekend. Very critical to watch the price action.
Because of expiry?
Because of expiry, but also because all of that support that's been coming from put decay, right? Which has actually been increased even by a couple of big trades that we've talked about from Carl Icahn, a couple of other people, has only exacerbated. Those demands ultimately here will fade on the AM print tomorrow morning. And that makes a huge difference.
Okay. Because there's kind of like a magnetism, right? We had a guest yesterday telling us it was around like 4150, the kind of gamma pin is the way he described it.
I don't really focus on the gamma pin as much as some others do. I think the important point is where is the decay of the VANA and charm flows coming from, and in this market it's about 40.5. 40.65, a couple of other spots down here below, and so those levels have been very, very solid. There's support right above it, as you've seen, 100%. And as long as that's there and the flows support that, you're going to get these big pushes throughout the day that continue to support the market and then dampen volatility.
Yes.
Now, some of the things that are kind of important as we look forward is, there's this idea here of a window of weakness. But if I'm talking about it on air, and I've been talking about it for 4 months, and about 2 months ago, Goldman hopped on the bandwagon. Now Marko Kolanovic is out talking about the Fed 15 crash. Actually, pretty interesting. ChatGPT, that people put into ChatGPT, what's happening in the next week? And Feb 15th, a crash comes up on ChatGPT. That's how pervasive it's become. I don't know if it's the Cem Karsan effect or broadly kind of people tuning into what we've been talking about.
It's like leveling in poker, right? You're thinking about what's being thought about, and if people are thinking that this event is going to be a negative thing, how do we know if it is manifesting itself?
So knowledge is vol dampening. I think that's important to understand. The more people know, the more efficient a market is, the more the vol of that of the realities are dampened.
Okay,
right?
Yeah, that makes sense.
And so we're here in this window of weakness, but if those flows, which are, by the way, immutable, they come and they go, we know they exist, if that's the system, but people understand it, ultimately that means vol compression, right? And we've been seeing that in spades lately. So you have to be careful. This is a period of non-strength, okay, maybe not weakness. If the market consolidates here and doesn't break below these important levels, right, you have to realize, especially as we move forward into about Feb 28th, end of month, right, beginning of month, as you enter now, those VANA charm flows increasing, they're actually going to be even bigger, right? And because we're going into a quarterly OPEX.
If the window of opportunity, or if the window of weakness, rather, we should call it, doesn't manifest itself, then what you're saying, basically, it's almost kind of like a whirlpool, a vortex.
Correct.
If it doesn't bring us down, then it shoots us higher.
That's correct. So ultimately, there is this delta, right? And it can be gamma if we push down into it, right? It can make the situation worse. Things could get ugly. They could slip. But if we can consolidate above it, right? Ultimately, those deltas have to be bought back, and particularly as you go into a March OPEX. I'll remind people, the 2020 crash started the day after Feb OPEX and ended the day after March OPEX. Nobody talks about that. That's a huge deal. Everybody talks about COVID and everything else, but why did it start the day after Feb OPEX? Why did it end the day after March OPEX, right? We knew about it in January. The market continued to rally for a month. Those are the power of flows. Yes, fundamentals matter, but the timing and how this works ultimately comes down often to just the flows, and particularly in these options markets, can be very, very combustible and very, very supportive. So
I like that word, combustible.
Correct. Yeah.
So when will we know? It seems like it could be as soon as like early next week, like Monday or Tuesday. If we haven't gotten slammed by then, maybe we skated through this pit and got to the other side.
The reason that's also an important window here is because of the long weekend, right? So there's an acceleration of these kind of the time over this period. So it's not just trading days, it's calendar days that matter. Also, right, you need to get going here if this is something's going to happen, right?
Yeah.
We have to start slipping. There's an added importance this time around because again, I've referenced a couple of big trades. By one Carl Icahn. We don't know it's him. It's something from experience. I think it likely is. 40.5 puts in February PM expiration in the ES. He bought a ton. A slippery Friday could make those in play, which could be very interesting. Added to that, he bought the March big OPEX, a lot of open interest, 39.50 puts in mass. Those have also added to kind of some of that downside gamma effects that could make things very slippery into a decline in the ES. There's also been a lot of activity on the VIX call side. The vol is very compressed, which creates a lot of potential energy for something bigger. Again, though, it doesn't happen here, right? You move a week and a half, maybe even a week, right, forward. You have to start looking to be a bit more constructive. I get a lot of calls from institutional investors all the time, clients, potential clients. The tone right now is, oh, Cem, have I missed it? Right. What do I do? How do I get back in? I actually overperformed the decline last year, but now, I'm kind of underperforming the rally. What do I do? What do I do? How do I get in? What do I do? That is the mentality. This FOMO is alive and real. There's a lot of short interest, and particularly with that March, sitting out there. If we don't get this decline in this window, you have to be very constructive and thoughtful about how this thing could continue to go. Ultimately, the biggest declines happen after some type of blow-off top.
We can feel that MOMO, the FOMO trade building. We're getting these vertical moves in the middle of the day for Bitcoin, the type of stuff that really doesn't happen outside these FOMO events. So the tender is set, the leaves are there for a combustible event. If it doesn't happen, then potentially that FOMO kicks in. And where do we get through that window? Is that next week, basically, if we haven't gotten slammed by Friday or to Monday?
Feb 28th is a nice little spot because you also, in a positive month like we're having, or we might have at that point, or even a sideways month, you tend to get end of month positive flows and beginning of month flows. That can get it kicked off. As well as, again, there's a kind of everybody looking at everybody else waiting to say, is it going to happen? Is it not? There's likely to be people wanting to jump in early and get out in front of it before they have to chase again. So I think a watch market never boils, right? You kind of knowledge is vol dampening, however you want to put it. At the end of the day, we have a window here. But people are watching, and if everybody's watching, it's very hard for it to happen, right? If ChatGPT is saying a crash is happening Feb 15th, you got to be careful. That doesn't mean, again, it's not going to happen for sure, right? These flows are immutable at the end of the day. Those flows are off the table that have been supported during this window. But you have to, come to terms with the fact that there's a lot of people
waiting for that blow to come. All right, so we do have a short period of time here to see if the market takes that bait, takes the post-expiry drop-off, the kind of combustible potential for a move lower. If it doesn't, then we have time to run and FOMO until ultimately the Fed and the market come to heads. And just real fast, you've told us that your larger negative macro view we should be looking for when stocks go up and vol goes up, which we haven't quite gotten to that extent yet.
We've gotten it for a day or two in between, but we really haven't gotten that adjustment in sentiment, adjustment in positioning that comes with a call squeeze, that comes with this very powerful final move, which is a big realized vol move generally at the end, as well as an implied vol move up. Naturally, Fixed strike vol will take you to a lower VIX. You will slide. Calls are on a lower implied vol than puts are. You will slide to a lower vol. Naturally, if that vol stays the same as it is, if you look at the VIX and it's sticky into the rally, that's an easy way to say actually fixed strike vol is coming up. And if that can happen for days on end, that can unpin vol. That can create a situation where dealers themselves are no longer long a ton of vol, that they start to get thinning out on vol themselves, and that can create itself a more combustible situation. Not to mention the stretching of that rubber band that can ultimately.
But that is more kind of like how the FOMO trade ends, if it happens, right?
Correct.
So that gives us some pretty easy steps to think about. The short-term post-expiry potential for the market to drop. If it doesn't happen, you get the FOMO melt up, and when that one ends, if you get vol up, stocks up.
Yeah, then you sell. Yes,
good.
Yeah, absolutely.
Cem Karsan, you the man. Thanks for bringing the
Thanks
information
for having me.
to
Always
us.
a pleasure.
All right,
Take care.
I love it.